You're tuned into Smooth 98.1, your love music, love live station. It's a lovely Wednesday evening. It's 16 minutes past 5 p.m. and you're tuned into the Smooth Drive with me, Ayokumi Kekireko. And it's time for us to get into the world of finance on personal finance, where we get to talk about your money and, of course, how you can make it work for you, and definitely how you can make a whole lot more, because we need to make a whole lot more money at this point in time. We all know what's going on in the country and in the economy as well. It is a time for us to think outside the box, or even think outside of any other shape or whatever, because it's tough. But that's why we're here to share the knowledge and give you all the information that you definitely need. Joining me this evening to have a conversation, looking back at the CBN hike in rates. We're looking at Nigerian investment opportunities that have been created or that could be created by that. And to have this conversation with me and just give us all the insights is Ayodeji Ebo. He is the CBO of Optimus by Afrinvest. Very good evening to you, Ayodeji. Great talking to you again and having you on the show.
Yeah, good evening. Good evening, Lagos.
It's a pleasure to have you. And to you out there listening to us, you can be a part of the conversation. Any questions you might have for Ayodeji, he will definitely do his best to answer them, or any queries that you might have as well. Come through on WhatsApp. The number is 0809 440 981. 0809 440 981 is the WhatsApp number. And you can also catch the live stream on YouTube at Smooth 981 FM Lagos. And yeah, be a part of the conversation as always. So IDG, let's get into the nitty-gritty of the matter. So we saw a big monetary policy rate hike of 400 basis points from 18.75% to 22.75%. Now, were you expecting such a rate hike?
Okay, thank you very much. And yes, I would say I was expecting that, but not this massive, to be candid. This is like a bold step, and the signaling also shows that which also confirms the direction which the CBN wants interest rates to go. And you may want to say, okay, why is high? Part of what is also happening is to provide an alternative speculation in the FX market. So if interest rate is attractive, and it will now be an opportunity cost for people to um, speculate, especially for speculators. I'm not talking about investors now in the FX.
All right. Okay. Now, in addition to the rate being hiked, the cash reserve ratio was also hiked up to 45% from 32.5%. Now, imagine that we're 5 years old. You're talking to us right now. What exactly is the cash reserve ratio, and what does the hike mean for commercial banks?
Okay, thank you very much. And breaking it down, the cash reserve ratio is the minimum amount that banks are expected to retain from customers' deposits. So putting it into perspective, Ayo goes to the bank and saves 1,000 naira. It is expected that 450 naira from that money should be with the CBN. The implication of that is that the bank can only earn money from the 550 naira that is left, which means that if they are promised to pay me 10% on my 1,000 naira, but I can't make money on 450 naira, I have to make the money from the balance of 550 naira, which means that I would sweat that 550 naira to earn a return that I can use to pay. So I'm using 1,000 naira now. Now imagine you are taking 100 million to the bank. It means that 45 million of that money is already sterilized. It has to be with the CBN.
CBN, okay.
You can only make money from the 55 million that is left for you.
Right. Okay. Now, is there a particular reason that that percentage needs to be with the CBN?
Okay, thanks. It's that CRR is also a monetary tool to control liquidity in the system. So
Okay.
what CBN is looking at is that I think we have enough liquidity in the system. So you would see from the money supply data, you will also see from the auctions that we're seeing entering and going into trillions. So CBN is trying to say, banks, I'm taking more. So from the usual 32.5% now to 45%. So they've taken more money out of the circulation,
Mm.
out of the banking system to the CBN, which means that it will also reduce the amount of liquidity within the system. So it's always done when the CBN wants to reduce liquidity in the system, you would increase the cash reserve ratio. When you want to free up liquidity and increase liquidity in the system, you bring the cash reserve ratio down. So it's a monetary tool to control liquidity in the system.
All right, all right. Glad to get that explanation. For for some people that might not really understand what it means or what it's all about, it's always great to get a clear understanding and clarity on what these things are. Now let's look at the money market and the fixed income securities right now. Now, which direction do you expect the rates to go?
Okay, thank you. Um, for money market fixed income security, it's expected to go up. Yes, we have seen that even before the MPC meeting, that's the Monetary Policy Committee meeting of the
Right.
CBN, going up. So if it's very effective, then it has to also move in that direction. You know, we've seen that NPR has not been an effective tool within the past years. So
Right.
the expectation is that things should go up, and that would also now impact on money market funds. But it's good for investors to know that it's not suddenly for especially those investing in mutual funds. The fund does not immediately increase increase in return. It is over time for new monies and new investment that is being made by the portfolio managers at higher rates that will drag the interest or the return on your investment upward if you are investing in mutual fund. But if you are investing directly, you will be able to benefit from that with new funds, benefit from the higher interest rates environment.
All right, good stuff. Now, I know that you regularly tweet results from the Treasury Bill primary market auctions. Now, the last one on February 21st actually saw a 19% rate for a 364-day bill. Now, what is your response to people who say it is still below inflation of 29.9% as of January? Did you get the question, Ayodeji?
Please, can you repeat that?
Okay, okay. Let me take it again. I said that you regularly tweet results from the Treasury Bill primary market auctions. Now, the last one on February 21st, it saw a 19% rate for a 364-day bill. Now, what is your response to people who say it is still below inflation of 29.9% as of January of this year?
Okay, thank you for that. My usual response is that your focus should be bridging the gap between inflation and the income, not trying to cover up. Yes, it's good to cover up or to meet up with inflation rate, but bridge that gap, that real income. If before this last auction, so before the last auction, that's two auctions or three auctions ago, the interest rate was around 12%. So now, when you look at the true yield, which is the actual return on the investment, is around 23% on a gross level. You know, the interest rate is the 19%, which
Right.
because, and Treasury Bills is a counted instrument. So the return on that investment is as high as 23%. So its inflation rate is at 29.9%. What you are losing is just the spread of 6%. It is still better than you than investors lamenting and not taking any action. It means that you will not even get the 23% return if you are waiting to get a return that is above inflation. And if it's going to be above inflation, you also know that there will be an element of risk. Treasury bills is perceived risk-free. Any investment that is higher than that would have an element of risk. So now, depending on your investment objective and risk appetite, you are going higher than that. Also, sure that you are able to absorb that that you are about to take.
All right. Now, but for people who actually talk about it still being below inflation and so on and so forth, isn't this clearly a risk? I mean, clearly they can see that it's a risk. So what exactly is the point in then trying to make those assertions and so on and so forth? You can clearly see that, oh, the way it is right now, it's going to be something that is very, very risky. But still, you complain. Why does that tend to happen?
Yeah, I think it's there's a factor of understanding, there's the factor of greed, there's also the factor of um just I will just leave it at greed and understanding. If you know, you see why Ponzi scheme tried, why MMM tried. Most people know that they can lose their funds before they do it. Most
Hmm.
people do. But they will still do it with the mindset that I would cash out before it eventually goes. So it is those that are unable to cash out that eventually lose out. So, but for some, if they don't look at what we call time value of money, so each day that I wait and save and continue to lament that the interest rate is not sufficient enough to cover inflation, and I don't have other opportunities or investment alternatives, then I'm losing money on a daily basis. So you see inflation rate at 29.9%. If I've
Right.
kept 1 million idle, it means I've lost up 290,000 naira in real times.
Wow.
But if I see an investment that would give me 23%, or even if it's 20%, and I'm able to recoup 200,000 naira, it means I've reduced the potential loss from 290 to 200,000, which is the impact of inflation, which is the purchasing power. That your 1 million naira, if you take it to the market now, it buy you less goods. So if you are able
Hmm.
to naira from somewhere and add to it, then it would help you in moving your investment forward.
Okay, now just off the back of what you just said, I mean, take it. I mean, having 1 million naira saved up, maybe in the bank, and then the thought of losing a whole 290,000. So would you then say, Ayodeji, that it's probably not the best thing to leave all that money idle and try to invest it or make it work for you? Is that basically the best thing for individuals to do right now?
Yes, so you are spot on. You need to ensure that your money is working for you. This point in a situation where we are now, that inflation rate is high, it means that your purchasing power is being impacted. And now that the exchange rate or naira depreciation is high, which is higher than even inflation rate, then you need to see how you want to protect yourself. You don't want to work so hard and you're just putting your money without earning any return. So you
Hmm.
need to be able to see what forms of investment aligns with your investment objective, with your risk appetite, that would reduce the impact of inflation rates as well as the exchange rate depreciation on your investment. So you will imagine I was speaking with someone and saying, "Oh, I'm trying to get a phone." 6 months, if you check just 2 months ago, if the phone was supposed to be, if you have saved 1 million, phone is 1.2 million, and you're trying to save up 200,000. If you go and price the phone after 1 month of pricing the phone could have been 2 million. So how fast do you want to save? So if you are able to earn a bit of return on that, or
Right.
alternatively, if you know you are buying, you can also hedge by converting it to uh, converting and investing it in FX. So even if there's a depreciation of the naira, by the time you're also converting back, you are protected a bit. You are not speculating, so I think it can go up. Let me quickly buy and sell. But you are taking strategic positioning based
Okay.
on your investment objective.
All right. Very well put and points very well taken as well. We'll definitely be taking more of these points from you, Ayodeji. But on the other side of this quick breather, stick around, keep listening because personal finance right here on Smooth 98.1 will continue. Don't go anywhere. It's all about your finances made easy. All right, quick break. Man, as you said, that's 1 million. You can lose 290K. I say, 1 million, 290K. Just like,
Yes, because it's not disappearing in your bank account. People don't know
yeah,
that it's losing values.
it's the
So you
value.
go and price something is 1 million naira. That's 1 year. Come and price it now. You will see that it's maybe at 2 million naira. So if you can get
True.
200,000 naira
Very
to
true.
add to the 2 million.
Very, very true. Very,
Hello?
very true.
Yeah.
I agree with you. I agree with you. Very, very true. A friend of mine just bought a phone.
So
Was
that's people
lamenting.
don't look at that because the money.
A friend of mine just bought a phone. She was lamenting because I think she had priced the phone out. She had an idea of how much the phone was at the time. Maybe about maybe a month or so later, she was lamenting, the price has gone. I was like, see you. You don't know what's going on. Anything that you see now, if you have the money, you quickly pick it because
During high inflation, that's why they say people save less. You spend more because it doesn't make sense to save when inflation rate is high. And it's also good to borrow. Those that also benefit are those that borrow. So if that phone, if someone has said, the phone pay back over 6 months and I will add 20% interest rate, it may make sense to collect that phone and pay back because with the exchange rate, the price might have doubled by
oh yes,
100%, but you
oh
have
yes.
already locked in the investment. So these are some decisions that some people may not also understand.
Mm.
That
All right, let's get back in.
okay.
All right, you're welcome back to the second half of Personal Finance right here on Smooth 98.1. You're tuned in to the Smooth Drive. My name is Ayo, and my special guest this evening is in the person of Ayodeji Ebo. He is the CBO of Optimus by Afrinvest. And we've been talking this evening about Nigerian investment opportunities created by the CBN hiking rates. And you can join in the conversation. Any questions you might have, any thoughts you might have, please do share them with us on 0809 440 981 0809 440 981. That is the WhatsApp number. And you can also join in the live stream because we're streaming live on YouTube at Smooth 981 FM Lagos. So come through and let us know your thoughts. All right, Ayodeji, let's get back into the conversation. I talked about Treasury bills a little earlier on. Now, let's look at stocks. We saw the market drop today. Now, is it normal for the stock market to react negatively when the benchmark rate goes up?
Yes, it's normal. That's when interest rates from fixed income is high. If it has a negative relationship with the stock market. Because
Okay.
why does this happen is that the stock market becomes less attractive. You look at the stock market, people invest because of the expected return based on capital appreciation and dividend yield. But if you discover that the dividend yield is becoming less attractive, and you can put your money in fixed income with that does not fluctuate and earn higher return, then you see people move from the stock market to the fixed income market. The stock market is volatile, it goes up
Okay.
and down long term. And if the return you would get is not as much as what you would get in the fixed income. So you see people switching their portfolio from more of fixed income to more of fixed income than stocks. But I always say for those that are stock investors, you don't buy when if you are comfortable to buy when stocks are high, you should be more comfortable to buy when they are low. Don't wait
Mm.
until when stocks return to that high level. That's when that fear of missing out, FOMO, sets in. But now that stocks is going down, you should be averaging down. Yes, there can also be you don't have extra money. Stock is for long time. This is the time that you begin to buy those stocks that still have strong fundamentals at a good and a cheap valuation. You buy over time. I'm not saying you buy everything today or buy everything tomorrow.
Mm.
You continue to do what we call dollar cost averaging. You average down on a periodic basis so that when the stock market would turn around again, you would also now benefit from it. And I always say this to those that are stock investors, you don't need any excuse to take profits. Some people add 100% profit waiting for you to get to 150%. The way the market works, that 100% might now be around 50% because the market
Mm.
has turned around. So when you
Right.
make profit, take part of that profit. You can retain some because it is not, you don't earn the profit or earn the income until you sell. We call it paper
Yeah.
profit because it's, you just see you bought First Bank at 10 naira, it's now 30 naira, you see 20 naira. But it is until you sell that particular those shares that you actually earn.
Mm. That's what it becomes real.
It becomes real. Anything can still happen. If the stock is on offer for 5 days, that's 50% down. So, which means nobody is buying and everybody wants to sell. You can, and that is even more pronounced in the US market that this market can go down 1,000% and go up 1,000%. So once you see you have made your meet your target return, you can sell part of it while you retain some.
Mm. Okay, now that's a very interesting point. So looking at that, should this be where discipline comes in? I mean, for those who are into stocks to say that okay, like as you said, if it gets to about 100%, that take profit. So is this where discipline comes in, where an investor would say that no matter what the situation is, I should peg a particular percentage for when I'll take profit, and whenever it hits that particular percentage, I would always take the profit and not let maybe greed or something come into play.
Yes, so well said. You need to, before you go into the market, you need to state your objective. Is it for long term? Is it for short term? So you need to have your, if it's short term, you need to have your target exit price. Once you hit it, you can reduce it. If you see that the market is still have upside potential, you may want to reduce it. So for instance, there are some long-term portfolio, even like for my kids. I don't sell their stuff, but when I saw that market was really at a very high level, I took profit on their accounts and kept the money. The money is still sitting down there to come and buy back. It's not for trading, but I discovered that these
Okay.
prices are hitting almost all-time new high. Why don't you take some profits out of there for maybe 20%? And if the market continues up, they still have stocks to benefit from. So if we have some of these strategies, it will help us to optimize our portfolio. But if you're also looking at long time, you may not even bother. This is the time you now begin to buy more. If it maybe 5% addition to the portfolio, 2%, you continue to now average down on those stocks that are good. If you are, I always say, let me repeat that. If you are comfortable to buy Zenith Bank, maybe you came in at 38, and you are now lamenting that Zenith is now 27. This is the time you should even be buying more and accumulating it because the fundamentals of Zenith Bank, this is not a recommendation, I'm using it for example,
Okay.
has not. So if you need to also know that when you are going into the stock market terrain.
All right. Very well said. Now, looking at that, would you recommend the stock market at this time? I mean, compared to T-bills and bonds, or is it best to have a healthy mix of both of them?
Okay, I like your question, and you also end it with the the right answer. So currently, I speak about it. You need to have a portfolio, which is a mixture of different asset classes. You need to have a portion for stock, which would having stock is a risky asset as it carries higher risk. We say medium to high risk. So depending on your risk appetite, you want to have maybe 20%, 30% of that in your portfolio. You have your fixed income now that interest rate is high, you go very long to lock it in such that if interest rate will reverse in the next 1 year or 2 years, you are benefiting. So you have that. There's also, you can trade US stocks. If you don't know the type of stocks to buy, you buy the ETFs, you buy those that the top 500 that captures the top 500, top 100 tech companies. You look at those companies you buy, for even US stocks, you are both hedging based on Naira and you're also benefiting from the appreciation of the market. You also have that. FGN savings bond, you also have, so you have a mix of a portfolio that different returns are coming from different investment sets for you. And all these things I mentioned is not for the high end. If you are able to save 10,000 naira every month, for instance, you can say I'll put 2,000 naira in Nigerian stocks, I'll put 2,000 naira in US stocks, I will put 5,000 naira in FGN savings bond. So you can begin to have a mix of portfolio. Now, depending on
portfolio.
Diversified portfolio. And you can also have some high savings investments that gives you high rates and gives you rest of mind.
All right. Now let's talk about foreign exchange. Should Nigerians still hold that as part of their portfolios? Did you get the question, Ayodeji?
Thanks. So I will be speaking to investors.
Okay.
Yes. So I'll be speaking to investors and not speculators. So if you are investing, you still need to have dollar investment in your portfolio in the likes of dollar savings, dollar mutual fund, investment in the US market, investment in euro bonds. You still need to have it. Yes, the naira may be stable after a while, but we know that there's a certain amount of depreciation that is expected to happen on our naira as long as we don't produce as much as we import. You don't export as much as you import. So when you look at it, there should be a gradual adjustment. So but for speculators, I would say you need to also be very careful. The fluctuation, nobody knows the direction. It's dependent on supply. We saw last week was as high as 1,900, and now you are seeing offer at almost 1,400 in the market, 1,450 in the market, depending whether it's inflow or cash dollars. So, but for those that are investing, you just keep your investments, discipline, consistency, keep accumulating it. You are not bothered about any fluctuations because you are not trying to bet to see that next week it will go back to 1, or you're going. That's speculation and you can lose your money doing that.
All right. So just to round off the conversation this evening, what is your summary advice for those who are preparing to invest in Nigeria this year?
Okay, thank you. So I would say that you need to update yourself or seek counsel where you don't know so that you can optimize your investment. And also, you need to begin to take a bit of risk. So if you have been investing in Treasury Bills, yes, it's high. If you see good rated commercial paper that carries higher interest rate, you go for that and you mix that in your portfolio. Also, going long, if FGN savings bond comes back to the levels of 15, 16% for 2 years and 3 years, you lock in your funds. Even if interest rate comes back to 4%, you continue to enjoy that rate until the maturity of that investment. So you need to have a mixture of investment. Nigerian stock market seems down now, but you can also begin to take a pie of that. The US stock market take a pie of that. So when you have a balanced portfolio, whatever is happening in any economy, even investment in gold is also very necessary now. So it will also help you to balance your investment and hedge you against inflation and any exchange rate depreciation.
All right, very well said. Thank you so much for sharing your knowledge this evening. I've been talking with Ayodeji Ebo. He is the CBO of Optimus by Afrinvest. It's a pleasure talking to you and learning actually about diversifying our portfolios and how very important it is for us to do that at this point in time. We hope to have you again for more conversations in the future.
Always my pleasure. Thanks for having me.
All right. And thank you for listening and being a part of Personal Finance this evening. Comes up every Wednesday at 5:15 p.m. right here on Smooth 98.1, your love music, love life station. Meanwhile, stick around because more great music to come as the Smooth Drive continues.